$3.7 billion for a glass manufacturer. Tell me Apollo isn't just bored right now.
They are buying Japanese industrial scale, Nate. NSG Group is massive. But did you catch the timeline?
I saw the enterprise value and stopped reading.
March 2027, 2.5 years to close.
Wait, really? My analyst would have rioted over building a model that long?
The regulatory approvals will be brutal. But speaking of regulatory nightmares, let's look at Grab trying to swallow foodpanda. The rundown. Up to $2 billion for Ouro Medicines, but look at the phrasing. Up to. I guarantee you the upfront cash is a fraction of that.
Classic pharma earnout. You can't blame Gilead, though. T-cell engagers for autoimmune diseases are the absolute hottest ticket right now. It's a massive pivot from oncology.
True, but $2 billion is a steep price tag for a pivot. I want to see the clinical data before I buy the hype.
You have zero romance in your soul, Maya.
I have spreadsheets. They never break my heart.
Speaking of breaking hearts, Grab is taking out its regional rival, $600 million to acquire foodpanda's Taiwan business. Consolidation play, pure and simple. I love this move.
You love it because it looks like a monopoly on a pitch deck.
Exactly. A duopoly becoming a monopoly is the banker dream. You buy the competitor, you slash the marketing spend, you hike the delivery fees. It's beautiful.
It's also an antitrust nightmare waiting to happen. Taiwan regulators aren't just going to rubber stamp a $600 million chokehold on food delivery. I'll be watching the pushback on that one tomorrow.
Okay, fair. Let's talk about something prettier then. The beauty world is absolutely buzzing. Estee Lauder is reportedly in very deep talks to acquire Spain's Puig.
I saw Puig's stock surging this morning. The market is definitely buying the rumor.
Oh, investors are practically begging for a beauty mega deal. If we see official confirmation or a term sheet emerge tomorrow, it's going to trigger massive dominoes across the whole sector. The rest of the industry will instantly start looking for dance partners.
Assuming the premium makes sense, but before we get to the makeup counter, we need to talk about some heavy industry, because Apollo is throwing down nearly $3.7 billion for a glass manufacturer.
NSG Group, a massive private equity buyout in the Japanese industrial sector, which I am entirely obsessed with right now.
The target close date is March 2027, which is a literal lifetime from now. Let's break down why Apollo is playing the absolute longest game here. The big one.
$3.7 billion enterprise value for a glass manufacturer. Apollo is really leaning into the unsexy industrial play here with NSG Group.
Unsexy is where the margin is. They make the glass for half the buildings and cars you see. But Nate, did you actually read the target close date on this press release?
I saw it, March 2027.
March 2027. Nate, I could get a puppy tomorrow and it would be a senior citizen by the time this paper gets signed. That's a massive red flag.
Oh, come on, it's not a red flag, it's Japan.
3 years to close a standard private equity buyout? You're holding $3.7 billion of enterprise value hostage to currency fluctuations, interest rate changes, and whatever the global economy does over the next 36 months.
You're looking at this through a tech sector lens where a deal takes 3 months. Japanese corporate take privates, move at glacial speeds. Apollo knows this. They're pricing in the wait, plus the yen is historically weak right now. They lock in the terms, navigate the shareholder approvals, and get a premier asset at a massive discount.
I'm looking at it through a risk management lens. You lock in terms today, but if raw material costs for glass production spike next year, Apollo is stuck buying a squeezed asset. I read the footnotes. They mention complex regulatory approvals required across multiple jurisdictions because NSG operates globally.
Right, which is exactly why they gave themselves a 3-year buffer. You're punishing them for being realistic about global antitrust and foreign investment reviews. Usually companies promise a 6-month close and then delay it 4 times.
I'm saying a lot can go wrong in 3 years. Apollo is basically writing a massive call option on the global construction and auto markets for 2027.
That's literally what private equity does. They take long views, and honestly, I love this play for them. Japan is the last great frontier for mega cap PE right now. Activist investors are finally breaking down the doors of these legacy conglomerates, and Apollo is first in line with a giant checkbook.
Sure, The macro thesis makes sense, but the execution risk is off the charts. If I'm an NSG shareholder, I'm demanding a massive breakup fee if Apollo gets cold feet in 2026.
Spoken like a true skeptic, I guarantee the bankers structured a watertight reverse termination fee. You don't announce a 3-year timeline without locking the doors.
We'll see. I'm setting a calendar invite for March 2027 to check if we're still doing this podcast and if Apollo actually bought a glass company.
I accept those terms. But speaking of massive bets, Gilead just dropped $2 billion on an early-stage biotech. And I know you have some serious questions about their T-cell strategy. Voices. So the market watchers are taking a victory lap today. Puig's stock went absolutely vertical after the Estée Lauder merger talks leaked. They are calling it a clear signal of strong investor appetite for a beauty mega deal.
I read that analyst note and I rolled my eyes so hard I saw my own optic nerve. It is not investor appetite, Nate. It is arbitrageurs chasing a rumor. We have not even seen a term sheet yet.
Oh, come on. Where there is smoke, there is usually a very expensive, nicely packaged perfume. Estée Lauder needs a massive win right now. Puig has the luxury fragrance portfolio. It makes perfect strategic sense.
Strategic sense does not pay the premium. Let me know when they actually file something official. I am way more interested in what the analyst is saying about Gilead acquiring Ouro Medicines.
Right, the quote going around is that this underscores a massive pharmaceutical pivot toward autoimmune T-cell therapies.
Exactly. Up to $2 billion for a first-in-class T-cell engager. That is a massive bet on early-stage science.
Keyword there is up to. I guarantee you my old banker buddies structured that with maybe 300 or 400 million up front and the rest in biobucks. You know how pharma deals work. It is all milestones.
You are probably right on the structure, but you cannot deny the broader trend. Autoimmune is the new oncology. Everyone is looking for an acquisition target in that space.
I will concede the trend. Just like I will concede that Blackstone kicking the tires on a stake in the Global Cricket League is the most predictably aggressive private equity move of the year.
Wait, really? Blackstone is looking at cricket?
Unconfirmed whispers, but yes, live sports rights are the ultimate yield play right now.
Okay, that is actually smart. But speaking of predictable moves, we need to talk about Grab dropping $600 million to buy out foodpanda Taiwan, because the antitrust regulators are already waking up. Spill the tea.
Wait, before we get to the beauty drama, are we just going to ignore the fact that Blackstone is kicking the tires on the Global Cricket League?
I saw that. Private equity trying to monetize a sport where matches literally take 5 days. Good luck modeling those concession revenues.
You're so incredibly American right now, Maya. Cricket is massive. 1 billion people watch it. If Blackstone gets a piece of those broadcast rights, it's a license to print money.
Sure, but do they actually know anything about the sport? Or are they just throwing darts at global media assets? I need to see the thesis.
The thesis is cash flow, Maya. It always is. But fine, let's talk about the deal that actually has a thesis. Estée Lauder and Puig.
The beauty world is absolutely losing its mind over this. Puig's stock is surging just on the whispers alone.
Because it makes perfect sense. Estée Lauder needs a win. They've been getting battered, and Puig has that incredible portfolio of niche fragrances. It's a classic bolt-on strategy.
I'm going to push back there, Nate. Calling Puig a bolt-on is wild. They're a massive European family business. You don't just bolt on a multi-billion-dollar Spanish empire without serious cultural friction.
Okay, fair. Integration will be a nightmare. But the market loves the idea. The commentators are practically begging for a beauty mega deal.
Speaking of offloading headaches, though, did you catch the Sony rumor?
The TCL thing?
Yes. Whispers are Sony is quietly trying to hand off its home entertainment business to TCL for around $1 billion.
Honestly, my banker brain respects that. Just cut the cord on legacy hardware. Take the billion and put it into gaming or content. Let TCL fight the margin wars on flat screens.
Exactly. Let someone else deal with the supply chain.
It's a smart play. Almost as smart as what Apollo is doing in Japan right now, which we need to talk about because $3.7 billion for a glass manufacturer is a massive swing.
Oh, The NSG Group buyout. I have thoughts on that regulatory timeline. Errorshint. Tomorrow's radar.
Pui's stock jumped out of its skin today on those Estee Lauder rumors.
I still don't see Estee Lauder pulling the trigger. They have enough internal mess to clean up before integrating a massive Spanish house.
You're underestimating the sheer panic in the beauty sector right now. Everyone wants a mega deal. We might actually see a term sheet tomorrow.
I'll bet you a very expensive coffee that we see regulators stall Grab's $600 million buyout of foodpanda Taiwan before we see a Puig term sheet.
Oh, come on. Taiwan's antitrust guys aren't going to move that fast.
It's regional consolidation, Nate. They're going to scrutinize every single delivery fee.
Fine, I'll take that bet. But my real wild card for tomorrow is Blackstone kicking the tires on a stake in the Global Cricket League.
Wait, really? Blackstone is looking at cricket.
Private equity loves a sticky fan base. It's the ultimate recurring revenue model.
I can't wait to hear you try to explain a wicket tomorrow.